Welcome to the Financial Planning Certification Exam Lessons podcast. This is going to be a sample lesson of the full series of audio lessons which are available at the website fplessons.com. That means financialplanninglessons.com, fplessons.com. At the website, you can find the full series of audio lessons. The full series of audio lessons consists of 6 different sections. Those sections include general financial planning principles, professional conduct and regulation, insurance planning and insurance products, investment planning, tax planning, retirement savings and income planning, and finally estate planning. A total of 6 different sections. You can buy the individual sections at the website fplessons.com. All right, let's get on to this sample lesson. This is Financial Planning Lessons, audio lessons for the Financial Planning Certification Exam. This is Part 6, covering estate planning, narrated by Nika Maramadi. This is Lesson 2.
Hello, and welcome to a review of estate planning for the Financial Planning Certification Exam. This is Episode 2. If you have not listened to the previous episode, I highly recommend you do so before you join us here. But without further ado, I am going to continue our discussion with types of titling. So remember that titling only really matters in common law states. Community property states, titling does not matter. It is the will that matters, okay? Just wanted to quickly say that one more time, if I haven't already drilled it into your head enough. Yeah, so let's discuss tenancy by the entirety. So this is a form of ownership that can only exclusively be held by spouses. So when you see TBE, which I'm going to refer to it as, or tenancy by entirety, then you know that it is only spouses that can use this type of titling. Transferring the property held in this form of ownership or any, severance of this tenancy by entirety can only occur with mutual consent of both parties. Okay, so anytime you want to transfer property, if you want to move money from, let's say, a bank account to another, or you want to sell a home and it's investment property, something like that, and it's held in tenancy by the entirety, then you are going to, or, severance of tenancy, right? Like if you want to change the titling, any change, essentially, those are just examples. Any change is going to require mutual consent of both parties. That usually means, signatures by both, acknowledgement by both. For estate tax purposes, the property is divided between the spouses equally, just like joint tenants with rights of survivorship. There is a reason for this type of titling. If you're wondering why would you use this, in most states, a home or any other like real estate or real property or any assets held by spouses as TBE are protected from claims of either spouse's separate creditors, but are not protected from the claims of both spouses, like a joint creditor, okay? So this is a nice little, I don't want to say like legal loophole, but think tenancy by entirety, associate that with a husband and wife, and the husband is in some dirty business and he knows that he's in some dirty business. So he makes sure that the house and the bank accounts and just about everything that you can imagine under the sun that you can title in tenancy by entirety is titled in tenancy by entirety. So what does that do? Well, if the husband gets caught, the wife has no idea, then those assets are safe. Boom. Creditors can't come for them. However, if the husband and the wife are in some dirty business and they know they're in some dirty business and they think they can get away with it by doing TBE titling on their assets, well, no, that's not going to work. It is not protected from their creditors. Just think of it like that. I don't know. That's how I remember things. Again, this might not work for you, but hopefully it does. All right. So just a note, I feel like this is a bit of common sense, again, kind of logical, but TBE is not allowed in community property states. Again, because titling doesn't matter. This is not a type of titling that you can have in a community property state, obviously, because titling does not make a difference, okay? So when you see TBE, think creditors, think it's, one of the spouses that's, in some deep financial doo-doo, and, the other one has no idea, so the assets are protected. Why punish the other spouse, right? But if they're both in it, then they get what they deserve. I don't know. Think of it like that. Moving on to tenancy in common, or TIC, TIC. So tenancy in common is a way for property to be owned by multiple people simultaneously, and property that's held in common or in TIC. It differs from joint tenancy in multiple significant ways, so let me rattle some off. So there can be several tenants in common who hold title as such, but these tenants each own an undivided interest in the property. Okay. The tenants in common are entitled to a division of income from any income producing property according to the respective interests that they have in the property. Okay. And tenants in common are free to transfer their personal respective share of property to any other individual they choose. For estate tax purposes, there are absolutely no survivorship rights in properties held in TIC, right? So what does that mean? That means like joint tenants with rights of survivorship. My husband dies, it automatically goes to me, the wife, right? That does not happen with TIC. There's no automatic divvying up or, granting of interest. So the person who holds the interest, this means that when they die, his or her specific share will go through the probate process and will be included as an asset in the holder's gross estate. And then it's going to get handled from there. Again, no automatic transfer of this interest. So this is great for properties that are used for business purposes, because, if you really think about it, if I have a business partner and we hold a property, joint tenants with rights of survivorship, we're going to have a problem because he is incentivized or she is incentivized to kill me for my portion, because automatically, without question, my interest is going to that partner if it's joint tenants with rights of survivorship. That's not ideal, right? We don't want to give incentive for our business partners to kill us. So yeah, and it makes sense, right? So let's say I have a rental property. I'm entitled to a division of income, that this property produces from the rents, and that's according to my specific interests. So if I put up 60% of it, I get 60% of the income. So it sounds great for, business purposes. I can transfer my shares to whoever I want. My business partner has no hand in my shares. It's like a huge wall, basically, around my interest. But we're living in the same city. No one has to approve anything, right? Like tenancy by the entirety. There has to be mutual consent for transfers and such, not for TIC. And yeah, no rights of survivorship. Okay, here are some methods or strategies for property transfers at death. So transfers can happen through the probate process. Okay, so probate is the process that is used to make distributions of property in an orderly fashion from a decedent to a group of beneficiaries. And this process is the publication of the last will and testament for the decedent dying with a will, okay, and filing You can file any claims against the estate by creditors. Not you, sorry. Creditors can file any claims against the estate. If you're a creditor, it'd be you. And by court supervision of property transfers, right? Okay, so that's one way to transfer property at death, is to go through probate, all right? There's also testamentary distribution. I mean, this is very basic, right? This is when a person makes a will, they're called the testator, right? And that will is basically making testamentary transfers. And that actual process where the transfer is accomplished is by and through the probate court and process. Okay. So a testamentary trust does not go through probate, but the will does. So a testamentary distribution is just basically distribution according to the will, which is processed by probate court in order for the distribution to happen. Okay. But a testamentary trust does not go through probate. That's the whole point of it. That's like the main appealing factor, is that it passes through probate. So it's less costly and private, right? Because all this probate stuff is public information. Okay. Intestate succession. So if there is no will that's found, or if it's not valid or whatever, then the decedent in legal terms is said to have died intestate. Okay, so when this happens, probate court will transfer assets of the estate based on bloodline laws of that state, basically. So it's always a good idea to have a will, but I guess if you don't and you're fine with the state laws, the bloodline laws in your state, then I guess you're good. But I don't know, to each their own. Moving on. So let's discuss some advantages and disadvantages of probate. So probate does administer the estate and it's court supervised. So, okay, not going to discuss the cons. I'm getting ahead of myself. But yeah, so you have someone to administer the estate and you have a, authority supervising it. So that's a pro. You marshal all of the assets. So there's inventory and valuations done. You get to, or maybe not you, your estate. That's so morbid to think about, but your estate is able to pay bills and resolve any outstanding balances or credit issues. And basically there's an overseeing of the distribution of the estate as it is directed in the will, right? Disadvantages is the loss of privacy. Like I just mentioned, it is all public information, which is not appealing to many people. There's a possibility of a will contest, which is very annoying and very costly to your estate and just a big headache, waste of time. That's when people think that they're entitled to something in your will. So think of your jealous cousins who are going to, sue the estate, or not sue this. They're going to contest the will in court and they're going to sue for what they think they're entitled to. So that's a whole other headache you have to worry about if it goes through probate. Whereas things like trusts bypass all this because you in your life specifically like set up this separate thing and, already just lined all the ducks up in a row, right? The moment you get probate involved, there are variables that you have to consider. Okay. The disadvantages are the costs of the court and other costs and delays because, yeah, I think we all know why there would be delays. And there's a possibility of multiple state proceedings, which is called ancillary probate. I think I'm pronouncing that correct. Ancillary? Yeah, it's ancillary. And all that means is, you have assets in different states. And let's say, you got a home in North Carolina, then that's just going to go through probate in North Carolina. And that's just such a headache. And ancillary probate is something that you try to avoid at all costs because it's just annoying and costly because, again, you're paying another separate court to like distribute this asset, basically. Okay. So assets that are subject to probate estate are any assets that are singly owned, property held by tenancy in common, right? Remember, because there's no rights of survivorship. So there's no like automatic upon death, it is someone else's interest, right? So singly owned TIC, any community, I just hit something, any community property that is going to go through probate, and assets where the beneficiary is designated as the estate, as the estate of the individual, okay? Obviously. I mean, I feel like this is kind of straightforward, so I'm not going to elaborate on that further. Moving on. Ways to avoid probate. So the most common answer you're going to find for avoiding probate is going to be a revocable trust, aka an inter vivos trust, as the best avoidance strategy. Let's go back to ancillary probate for a second. Okay, I just looked up the pronunciation of what I thought was ancillary. It's actually ancillary. Love making a fool out of myself. This is great. So we just learned something together, folks. It's ancillary. If you already knew that, pat yourself on the back. All right, moving on. So ancillary probate administration is what we're going to discuss. So a will is normally able to only dispose of the decedent's personal property interests and real property interests that are located in the state of the decedent's residence, okay? So it can't dispose of real estate located in any other state unless the property is subjected to a separate probate proceeding, right? I kind of mentioned this already. Probably should have waited. Knew this was coming. Okay. This is a separate probate process and procedure, and it is necessary, and that is what ancillary probate is. Thus, anyone who makes a will cannot avoid a double probate procedure. Okay? So there's going to be one in the state of the decedent's residence and another in the state where the real property is located. Okay? So assets that are subject to probate, this is just a place where you kind of want to memorize what is subject to probate because there's a lot of things that are not. So again, assets that are subject to probate, singly owned assets, property held in TIC, assets where the estate is the beneficiary, and any community property, right? 50% is attributable to each spouse. Lastly, I want to discuss transfer by operation of law. So this is for property held by joint tenancy with rights of survivorship. So there can be an election against the will, and in almost all states, a surviving spouse who has not inherited a minimum amount provided by state law, again, so it varies state by state. So if the surviving spouse has not inherited a certain specific minimum amount in accordance with state law, they have the right to take a share of the deceased spouse's estate. Again, states differ regarding the amount of this election, but also like what property this election applies to. So in some states, the spousal election is 1/3 of the deceased spouse's estate. In others, it's 1/2 or even more. So this exam is not going to cover like state by state law, just kind of, so for things like this, just kind of know the overarching qualities, characteristics, and such. Okay, so that's the election against the will. So if the spouse is basically not getting what they're entitled to, and what they're entitled to varies state by state. That is all for this episode. We discussed titling, or rather continued to discuss titling, which includes tenancy by the entirety, tenancy in common, and any property transfer strategies that can be used at death. We discussed the pros and cons of probate, as well as an election against the will.